All right, let's dive into something that's shaking up the financial world. We're talking about a massive, record-shattering surge in precious metals. Gold, silver, you name it. They're all hitting these unbelievable highs. So in the next few minutes, we're going to break down exactly what is driving this huge shift and what it's really telling us about the global economy.
And let's just start with one number, because this number kind of says it all. $4,966.59. That's what it cost for a single ounce of gold. A stunning new record that is making absolutely everyone sit up and pay attention.
And look, this isn't just a tiny little jump. We are talking about a historic peak, something that's sending shockwaves through the markets, and it has everybody asking one really important question. And that's really the core of it, right? Why are investors all of a sudden stampeding toward these ancient stores of value? Well, the answer seems to be a story all about confidence, or maybe, more accurately, a serious lack of it.
This really brings us to the heart of the whole thing, a fundamental crisis of confidence. This surge isn't just about market speculation or people trying to make a quick buck. It's about a deep, underlying shift in who and what people trust with their money. You know, market analyst Kyle Rada just captures the mood perfectly here. He doesn't pull any punches, saying that faith in U.S. assets has been, and I quote, shaken, maybe permanently. Wow. I mean, that's a powerful statement that gets right to the very heart of this rally.
Think about it like a seesaw. On one side, you've got traditional U.S. assets, like stocks and the dollar. As confidence in that side starts to weaken and go down, the other side, the one with tangible, historically safe things like precious metals, well, its appeal just strengthens and goes way up. Okay, so what's actually causing this crisis of confidence? Well, a huge factor is rising geopolitical tension. It's simple, really. When the world feels unstable, investors start looking for a safe harbor to park their cash. And there has been absolutely no shortage of flashpoints lately. We've seen fresh U.S. tariff threats against the EU, which just stokes these fears of a trade war. At the same time, all this uncertainty around a strategic NATO deal in Greenland, it just adds to the instability. Every single one of these events adds another layer of risk, and it just pushes investors towards assets they feel they can actually trust. Now, all this instability, it directly hits the U.S. dollar. The dollar index has been falling, and here's why that's a really big deal for gold. Gold is priced in dollars, so when the dollar gets weaker, it basically puts gold on sale for investors who are holding other currencies. And that lower price tag, it just throws more fuel on the fire.
But, and this is really crucial to understand, this is not just a gold story. The entire precious metals complex, the whole shebang, is on the move.
Just look at these numbers. I mean, while gold was hitting its record, silver surged to nearly $100 an ounce. Platinum soared past $2,600. This is a really widespread rally, and it signals a broad-based flight to safety.
This chart really puts the spotlight on the star of the show right now. Silver's performance, a massive 2.8% jump, is just dramatically outpacing both platinum and gold. So what's so special about silver right now?
Well, that analyst, Kyle Rada, points out that silver kind of has this cool dual identity. On one hand, it's a safe haven asset, right? So it benefits from what they call the fear trade when investors get nervous. But it's also a critical industrial metal used in stuff like solar panels and electronics. So it also benefits from the growth trade when the economy is looking good. Right now, it's basically winning on both fronts.
Okay, but this rally isn't just about what's in the headlines today. A huge part of this story is about what investors believe is going to happen tomorrow. So to understand this, we need to get our heads around a key term, a non-yielding asset. Basically, gold doesn't pay you anything just for holding it. No interest, no dividends. And this is so important because how attractive gold is depends almost entirely on what other investments are paying.
So here's the chain reaction, like dominoes falling. First, markets are expecting the U.S. central bank to cut interest rates. When that happens, the income you get from super safe assets like government bonds goes down. All of a sudden, holding gold, which pays you zero, doesn't seem so bad compared to a bond that's paying you very little. Gold just becomes a much more attractive place to park your money.
And we're not just talking about some vague feeling here. Markets have a very specific number in mind, 2. They are actively betting on 2 separate interest rate cuts from the U.S. central bank in the back half of 2026. This isn't just speculation, it's a concrete expectation that is driving trading decisions right now, today.
And that is the key takeaway here. Financial markets are always trying to look into the future. The record prices that we are seeing right now
are being fueled by events that aren't even expected to happen for another 2 years. The anticipation itself is moving billions of dollars.
So all of this leaves us with a really fascinating question to think about. For centuries, right, the phrase "as good as gold" has been the ultimate measure of security and value. But in a world where our faith in all the traditional systems is being shaken, what does that phrase even mean anymore? And what, if anything, could ever take its place?